If you want to know how to capitalize on a stock market when it's going down, you have to know what's actually going on in the market right now to know what to do. So I'm going to tell it to you straight. No BS, no clickbait. There's so many other videos out there that do all this fluff to try to get you to watch till the end of the videos, like and subscribe, do all this crazy stuff. I'm just going to give you the raw breakdown of what's actually going on in the market right now and then to know how to really capitalize on this, how to make money doing this. I built a portfolio of many millions of dollars with stocks and options. Let's take a look at what's going on and how to capitalize. All right, so this is on my newsletter that I send out every single Sunday. So, looking at the fear greed index right now, there's a lot of fear out there in the market, and everybody's pretty much panicking. There's tariffs, there's trade wars, there's interest rates, there's economy, there's potential recession coming. Everybody is worried about all the worst case scenarios of all this stuff actually playing out. So, now the stock market's going down. We're in the extreme category right here. Now, when the market is fearful, that is when you want to be greedy. That's when there's opportunities out there. You have to keep your pants on and not freak out when the market's actually going down. So by the time we get through the end of this video, you're going to have the confidence to know exactly what we should do in the stock market right now, and of course, how to capitalize. We have to go through everything here list by list. So the second thing we have to look at is interest rates, because interest rates are like gravity on the stock market. They're trending down a little bit as the months go on, but they're really not moving too much. If interest rates happen to go down, that would be good for stocks. Now, interest rates aren't really moving too much because maybe there's inflation fears that are coming back into the market, and that would mean interest rates have to be higher for longer. Because as interest rates go higher and they stay higher for longer, bonds are going to become more compelling for investors because that's a guaranteed rate of return versus getting that risky return in the stock market at a time that interest rates are going up. Valuations are a little bit high right now. Tariffs might get even worse. We might go into a recession. I'm going to cover all that in just a second, but things could get worse right now, so people are willing to put their money into a bond. So if we look at this chart right here, you can see the NASDAQ is down roughly 7% year to date. We had this massive drawdown right here that started on February 19th, and the market really hasn't seen much relief since then. So everybody is wondering, is this the bottom right here? Do we buy this dip? Or is the market going to keep going down? I'm going to show you a chart in just a second that really gives me a lot of confidence that I think we might have a little bit more pain in the market. So the number one thing why the market's freaking out is because of tariffs. It seems like every day Trump puts in a new tariff, they don't go into place, they take them away, they put them back in. All this volatility is in the market because of this, and it's hard for investors to really know, is this going to affect inflation? Is this going to slow down our economy? Are we going to go into recession? And then interest rates kind of are having a hard time to figure out, do we want to go higher or lower based on this? So there's a lot of uncertainty in the market right now, and it's all coming off the back of two back-to-back killer years for the stock market. So if we look at this chart right here, you could see that the S&P 500 is still up 47%, even accounting for this dip that we had right here. So maybe we could go a little bit more, but understand that we came this huge way right here. Maybe earnings didn't go up as much as the stock market did. So the stock market might deserve to actually go down a little bit on top of people just taking profit straight up because there's a lot of uncertainty out there right now. I'm not going to lie, things were super easy out there leading up into this year, and I talked about it to everybody. You know, everybody was saying that Trump is going to be the next good president for the stock market. He's pro-business, he's pro-economy, but all these things that he's doing right now are kind of like stirring the pot, and that's spooking some investors. So on top of the tariff news that came out, we had a survey by the University of Michigan basically saying that the 5-year inflation expectation is going through the roof. Now, the problem with this and what I said right here is you could see the Democrats are saying inflation is going to go way up, but the Republicans are saying inflation is going to go way down. So obviously, like when you look at charts like this, it's like they're so politically biased, we don't even care what they really have to say. So understand that when you look at data and you look at charts and stuff like that, you really have to understand exactly what you're looking at when you're looking at these charts to know if there's bias behind them or to really know if they're really showing you what you really want to know. So this survey is pretty much worthless, but a lot of people do put weighting on this when they allocate their portfolios. So I like to use this to my advantage, and I'll cover that in just a second. Now, the other really big thing that's actually good for the market right now is that inflation is trending down. So we just got a 2.8% inflation read that came in for February that we just got in March. So you can see the progress right here. We went way up to almost 9%. Inflation came down to below 3% right now. And this 2% level right here, this is the Fed's target for inflation, and they're not going to settle until we get to the 2% level. But interest rates are expected to go down, and we're expecting to get 3 interest rate cuts this year. So that'll bring us down to 3.5 to 3.75% for interest rates. And you guys know I'm like a broken record. Interest rates are like gravity on the market. So as rates go down, the stock market valuations that are a little bit lofty right now, even still, become a little bit more justified. I'll show you the chart in just a second that really changes everything, that gives you a crystal clear picture of, is the market going to go lower or higher from here? One more minute for that. I just want to cover one more thing. So the March 19th meeting for the Federal Reserve, there's a 98% chance we get no cut. May 7th, 71% chance of no cut, but then June 18th, we have a 23% chance of no cut, but 57% chance we actually get our first interest rate cut. So June is when we're expecting to get the first interest rate cut. And then if we jump all the way to the December meeting, this is where we're expected to get the total of 75 basis points of interest rate cuts by the end of the year. So something that's actually interesting here is we're not supposed to get these interest rates until the second half of this year. But if Trump keeps the pressure on with all these tariffs, maybe the economy is going to continue to weaken. Maybe we do go into a recession. But understand that if we do go into a recession, the Federal Reserve has a lot of ammo in their gas tank to then go cut interest rates to then try to support the economy. I mean, when we had COVID and the pandemic, they basically cut interest rates from like 4% to 0 overnight to try to support the economy. So in the middle of the COVID pandemic, when things were looking horrible, all the businesses were shut down, the stock market was actually going straight up because there's a lot of support from the Federal Reserve by lowering interest rates and basically printing money. The stock market loved it and it went back up. So I think that, if we do have a deeper dip in the stock market, I think that it would be a really, really good buy the dip opportunity. But honestly, I don't think we're there yet. I feel like the stock market is a little bit pricey still. Let me show you that chart right now. So I'm going to be completely honest with you. This is hands down the most important chart that you're probably ever going to look at when it comes to the stock market and how to value it as just a general level. So if you just go on Google and you type in S&P 500 PE ratio, and then you type in FactSet right here after it, it's going to bring you to an article that they update every couple days that shows you this chart on the top. So this chart goes from 2015 all the way to 2025, and I just updated it for this video right here. So basically what this chart's saying is how much did the stock market go up and how much did the earnings of the S&P 500 go up too? So S&P 500 actual stock chart versus the earnings of the S&P 500. So in the long run, when you zoom out, these two lines should typically go up the same amount together on a percentage basis. So if the stock market goes up 100%, you would expect the earnings to go up 100% too. But if they don't go up 100%, you would then see that the stock market is a little bit overvalued. So let's look at this time period right here to really understand the time period that we're in right now. So this period right here is coming out of COVID and we were printing money like crazy. Interest rates were 0%. So the stock market absolutely loved it and the market pretty much went straight up. But inflation ended up getting totally out of control and then the Federal Reserve had to raise interest rates. Remember, interest rates are gravity on the stock market. So when you raise interest rates from basically 0% all the way to 4%, the market corrected lower. But notice how the earnings of these companies held up pretty well. I mean, they went down a little bit, but the stock market did this overblown reaction and went down way more than what the earnings actually went down. So this right here is an opportunity zone right here. You could see that the S&P 500 is actually below what the actual earnings are doing. And honestly, when 2022 rolled around, like I was buying the crap out of this dip. I was buying calls, I was selling puts. I was a madman, but I made a lot of money on this dip. But if you don't understand how to spot things like this, you're not going to be able to capitalize on it when it happens next time. But if we go to the time period right now, you see these two lines where they're kind of diverting away from each other. So the stock market was pretty much outrunning what the earnings growth of the S&P 500 was doing. So I've been telling Academy members for months in my Discord that I feel like the market is a little bit overvalued in this time period right here because there's this big disconnect right here between stock market prices and the earnings. So if we look really closely, you could see the stock market corrected down pretty hard right here. And this right here corresponded to roughly a 10% dip of the S&P 500. And you can see we're much closer to this line right here of earnings growth. Now, I promise you, in the long run, maybe it's this year, next month, whatever time period it is, these two lines will touch each other again. They touch right here, they touch right here, they touch right here. These lines will touch. And the only way that those two lines are going to touch is one of two things has to happen or both. The stock market has to fall or earnings have to go up, or both of them have to happen. So right now the market's kind of getting cheaper on like a dual action way where the stock market is falling, but earnings growth is going up. So that's why those two lines right there are getting closer together for two reasons, because the market's falling and earnings are going up. So if we go back to the chart, market's falling and earnings are continuing to go up. So maybe for 2025, the market kind of stays flattish. But if the earnings happen to go way up because all this AI stuff is being implemented, maybe the market goes up on top of that because the earnings are going up so much more. So, what I'm personally doing with my portfolio right now, and what I'm telling everybody in my Academy Discord, is that yes, we corrected down a little bit, but don't catch a falling knife. The market could keep going down more, and understand, like I said, these lines will overlap. And the key is to notice that right here, the stock market went quite a bit below what the earnings did. So maybe the stock market falls all the way down to this level right here where it's below the earnings growth. And then if we go to the left, you could see the market might fall to 4,300 bucks per share on the S&P 500 or somewhere in that range right there. So just know, we don't have to fall to the growth line. We could fall actually below the earnings growth line. So there could be a lot more pain in the market to come. Now, how do you actually allocate your portfolio? So what I tell people is times like this right here where the market is a little bit expensive, like right here and right here, I like to have less leverage in my portfolio versus times right here when the market is cheap. And this does not require you to have to time the market perfectly. You just have to know grossly, is the market grossly overvalued or grossly undervalued, and then capitalize on that. Because you have to remember, even if there's a company that you feel like is trading below intrinsic value, not just the S&P 500, understand that all boats usually rise or fall with the tide. So if the S&P 500 goes out and everything goes down with it, it's going to be hard to swim upstream for a stock that maybe is undervalued. It's probably just going to become more undervalued in that time period right there. It's really going to be hard for a company to go way up when the overall market's going down. But when the market does decide to bottom, when the market does decide to go back up, the stock that is trading below intrinsic value will probably go up way more than what the stock market's going to do. So there's a lot of opportunities out there right now that I am capitalizing on in my portfolio by selling put options and by buying call options and really just by buying shares straight up, because I knew that the market was lofty for the last few months. So now that we came down a little bit, I'm starting to add quite a bit of risk to my portfolio. But of course, if the market keeps falling, I still have a lot of buying power on the sidelines ready to go. So right now, it's just super important to keep your emotions in check. Understand that there's a lot of people on X and on YouTube that say all this crazy stuff that don't have millions of dollars. Understand that if people are so good, where's their millions of dollars at? I see everybody talking on X about SoFi and Celsius and Palantir and all these stocks that are super overvalued. But now where are those people at right now? They got totally destroyed. Where's all the MicroStrategy people at? They got vaporized. Their portfolios probably went to zero. I mean, I get so many DMs from people saying, oh, I'm betting the house on MicroStrategy call options. And that's when MicroStrategy was at the peak. And now I don't hear from them people anymore, and they probably don't have a house anymore, to be honest with you. So if you want to learn how to do all this stuff the right way, not gamble, not day trade, not look at tickers all day long, because you're not going to make money doing that in the long run, understand that I don't personally know or heard of any billionaires that day trade. There's a reason why. You're probably not going to make it day trading. I hope you do, but honestly, you're probably not going to make it. Click the link below to get in my academy. It's on sale right now. You could come into my exclusive private mastermind Discord community for all my academy members. It's going to totally change your life. A lot of good stuff in there. There's a lot of value in there. But if you don't want to do that just yet, watch this video right here. It's going to totally change your life, and it's going to go more into detail how I do stock options. I'll see you guys there.